I think the main reason credit unions aren't offering this product is I think a lot of them are fearful. People generally fear what they don't understand. There's been so much misinformation out there about student lending in general that it's going to be the next bubble to hit the country because of the amount of debt that students are carrying. And so I don't think many credit unions take the time to really understand that a lot of the issues that are out there are related to the government guaranteed student loan portfolio and not the private student loan portfolio. So I think if credit unions would take the time to understand, what opportunities they have in this space, I think more credit unions would be open to the idea of offering private loans to their members. I think another reason might be that if a credit union doesn't have a university affiliation, like for instance our credit union does, they might not see themselves as having a place for that. And I think again it's a misinterpretation of it because all of us have adult members who many have college-age kids who are trying to figure out a way to finance this education. So their members are going someplace to finance their education. It might as well be the credit union where they do all their other business. Our credit union's approach to private student lending is that we really treat this product as a core business of ours. So just like we promote mortgage loans and auto loans to our members consistently, we take the time to educate our staff on the product and teach them how to offer the product to our members. We do the same with private student loans. We've been in this private student lending business since 2005. I think we were one of the first credit unions to offer a traditional student loan product that was underwritten by a credit union, and we've been very successful with the product. I think we service now about $90 million of private student loans and hold, I think, more student loans than all the other credit unions except for one. So we have the number 2 position of holding private student loans among all other credit unions. And again, I think it's really just being focused on the product, training our staff on how to offer the product, and then making it readily available to our members who are interested in financing their education through us. Student loan consolidation is probably one of the newest student loan products that's out there for credit unions to consider offering to their members. We launched our product late last year in 2013. It's been a little bit slower to catch on than we had originally anticipated. I think it's because we sort of tiptoed into it, and we have plans this year to more heavily promote the option to our members. Before we launched it, we did a study with one of the credit bureaus to find out how much student debt do our members have somewhere else. And we were a little bit surprised to find that our members held over $200 million of private student loans with other financial institutions. Once we learned that, we felt this is a product we need to participate in. So essentially, members can consolidate federal loans and private loans into one low monthly payment. We spread the payments out over 15 years, and the interest rates are really attractive. Rates start as low as 3.49%. So again, it presents ourselves with an opportunity to serve those members who have this debt somewhere else to give them either a lower interest rate or a longer repayment term to make the payments more manageable. I think first and foremost is treating this product as a core product. I see a lot of credit unions offer the product to their members, and then they hide the link to the application deep in the website, or they don't take the time to send marketing pieces to their members advertising this product. So just like credit unions market auto loans and credit cards, they should market private student loans if they're to offer them. I think the other thing that credit unions need to do is really educate their board and the senior management of the credit union about the product. Again, lots of misinformation out there about private student loans. A lot of people think that we're going to give $20,000 to a young person and we're going to hope that they pay us back. It's really much different than that. I mean, we are underwriting the credit just like we underwrite an auto loan or a mortgage loan, so that we're trying to put our members in a place where they can succeed. And then finally, I think, look at your community that you serve. If you serve a community that has a university or even a private college located within your field of membership, take the opportunity to go talk to the financial aid office and let them know that your credit union is now offering private student loans. There's not a lot of options out there for financial aid offices, so they're looking for lenders to provide this to their students. So I think that would be another key thing that credit unions would want to do who just get started in the business. Like any product, do it responsibly. For our credit union, while we hold about $90 million of these loans, it still represents a pretty small part of our total loan portfolio. In fact, our credit union said we don't want to have more than 10% of our total assets tied up in this product category. For us, that would mean that we wouldn't want to hold more than about $190 million of these loans. We currently hold about 90 million, 80 million. So we have plenty of room to continue to grow the portfolio, but we haven't said, man, we want to be in this with 50% of our loan portfolio, just in case something doesn't happen that we might have been able to forecast when we went into offering the product. So do it responsibly, underwrite the loans just like you underwrite every other type of loan at your credit union, and I think you have a pretty good shot at succeeding with the product.